Good morning, everybody. This is Pope Binary here. Pardon for the voice. I have a little sickness right now, but I thought I'll show you one of my favorite trading strategies. Okay, so I trade the 5 minute charts, and I typically choose the major currencies. And I my platform is I use Nadex. Okay, and so what we have here is one of my more favorite strategies that I find to be fairly reliable. And when you play your cards right, you can make some serious profits using out of the money trades. So what it is I found this strategy works best on large bearish markets. I don't know why, but if you try this on a bullish trend, it's not as successful the overall percentage of the time. So what we have here is we have a clear downwards bearish trend, and then I wait for a clear reversal sign, which is this. In our case right now, it'd be this engulfing bullish candle. It has to be an engulfing candle, and generally I wait for the large move to lose momentum. And you can kind of sort of tell that it's losing momentum through a number of things. One, the size of the candles. These sizes go from, right, we got a pretty small candle here to a large candle, meaning the bearish move is in full effect. But as you see, these last two candles here, they get smaller and smaller, and then you'll start noticing that wicks start forming on the top, meaning the bulls are trying to change the market direction. And so if you see a loss, this is called a loss in momentum. If you see a loss in a momentum followed by a strong bullish surge, that is a strong indication that either the market is it's on a flag, or not necessarily a flag, but there's consolidation kicking in, or it's like this, like consolidation would continue like that, or the market is just generally going to switch directions like this, right? And so I find this to be a very, very reliable pattern. And the reason I don't trade on this candle, I wait for this candle to finish forming. And then after that, I wait for this candle right here, this cross doji type candle. I wait for that to form. And the reason this is such a powerful setup is because immediately when this candle starts forming, you'll notice that it drops straight down. Okay, it'll be a fully filled red candle right here. But you'll notice, and I wait for a little bit. I notice if the candle after about 15-20 seconds does not continue pushing onwards downwards, I can assume that it's going to bounce back up because the market is trying to tell you it wants to go up, right? It wants to switch directions, but the buyers or the sellers want to consolidate, right? So if we look at a price action chart, when it starts switching, it's going to consolidate before shooting upwards, right? So this is consolidation in a large market swing. And so I'll just show you a couple examples I had about 30 minutes ago. These are the only two trades I've done today, but they highlight perfectly what I'm looking for. So if we look right here, this is on the USD versus Japan chart. We notice there's look at the overall market direction. We see a large bullish surge, and then right here we see the bears taking control. We see a long bearish move, and see what I mean? See how the candles get smaller and wicks start forming at top? That gives me an indication that the market is losing momentum. When I see this large bullish candle right here, I can tell you that the market is either A, trying to seriously consolidate for the large amount of bears, or it's generally switching directions. And right now it looks, based off this trend, it looks like it's actually switching directions. And so what happened after this large bullish candle formed, I bet immediately that this candle would drop down, right? This candle right here, this first red candle after, it was all the way down at this horizontal line at one point. So I placed a stake. Let's see, I got it. I played it safe here. I only got this trade for about 30 on a bet, which means I made 70 profit. Okay, so I put it at 104.090. Okay, everybody thought the market was going to continue shooting downwards after, because they thought this would just be a consolidation type thing. But in the last minute of the trade, it shot back up, right, and went above the stake, and I got $70. Okay, and just another example. I can't remember which chart it was on. Right here, the Australian versus US dollar. See how the market wants to go down, right? We're in a large bearish move in this Australian market. So we see the market goes down here. Here's two trades in one. I did not actually take this trade here because I was a little iffy on it. I didn't feel comfortable taking it. But this one, notice how there's a large amount of red bearish candles signifying that there hadn't been any buyers in the market in a long time, indicating that people are looking to buy. Okay, and so if you notice, there's, like I said, there's a huge middle candle here, meaning that's the meat of the move, right? That's the largest bearish move in this trend. Okay, and so the candles get smaller, they get smaller, and then out of nowhere there's an engulfing bullish candle, right? After a large bearish move, and so I bet up because when this candle first started forming, it dipped down and it stood at this horizontal line for a long time. It was like 2 minutes here. So I bet that it'd rise above it. And long story short, it did. And even in this example, like I said, I did not take this trade because for me, this wasn't this candle right here. It was too big, and I didn't think the move was actually the large bearish move right here. I didn't think it was finished yet. So I played my cards safe. But even here, you can see this large cross doji after this bullish engulfing. At one point, the candle was fully filled red down to this point. So if you had placed a stake even at the if you went with the risky, you still would have been right at the 7-0 stake, which is about right here. Um, or if you'd placed your stake right here, the safer stake, you would have made less money, but you still would have been right. Right? I generally choose the safer stake whenever I'm trading these type of trades because, like I said, these are out of money trades, meaning you'll hit higher profit margins, but there is just an off chance that you're going to be wrong. So just look out for these patterns in the future. I find them to be very reliable. Um, my number one principle is always look at the overall market direction and then play with fake money before you try this with real money. Because just because I'm telling you this doesn't mean it's going to work for you. You personally may not be able to identify these situations, and this no trading strategy is 100%. So play around with this one. It's another one of my favorites, and it's a consistently reliable strategy I've found. Please subscribe for more. I'll keep uploading, telling you my strategies, how I'm doing, and stick around. Catch y'all next time.